Hello and welcome to another edition of e-commerce in the news. This is your July 2022 edition. Let's dive in. Just to kick things off right away, we're going to take a look at the European commerce and what happened in 2021 and what's going on so far in 2022. Here you can see right out of the gate, we've got a 13% growth in 21, and it looks like the growth rate is going to be about 11% in 2022. So it's definitely slowing down some. Now, what you'll see in this particular article is the slower growth in general is attributed to Ukraine and inflation and supply chain issues overall. Some interesting data here, though, specifically that products bought most often are clothes, shoes, and accessories, which represent 68% of the online purchases in the last 3 months. And then consumers still buy most of their items from national sellers, so 84% from national sellers, which is pretty substantial. And the other thing that we want to note here is that generally speaking, a lot of the businesses in this market, in the European market, are focusing on reporting essentially. Many of the members have already reported declines in consumer purchasing power and confidence, and most of this is due to high energy prices, inflation, and uncertainty about the future. So generally, this is going to tie to having a even more substantial focus on having a digital presence and how that even is going to become a matter of survival for many companies. So here you can see they're saying that our customers expect us to deliver a seamless experience offering various combinations of online and offline interactions, and that supporting SMEs digitalization will require dedicated support, technical advice, and building awareness of the various tools to facilitate an online presence. Essentially, the market is getting even more competitive because of some of the inflation, supply chain issues, and Ukraine and the high energy prices. So you'll probably see this same trend, not just in Europe, but in other markets too. So the idea here as a takeaway is that it raises the bar and raises the standard that everyone needs to operate in with integration and making the experience seamless across the board. Okay, let's take a look at the next article now. Okay, in this article, you can see that Amazon is canceling and delaying a wave of warehouse plans as their e commerce demand cools. Now, you have to take this with a little bit of a grain of salt. So, they delayed or canceled 13 facilities, but they also grew at a massive pace from 2020 through to this point in the beginning of 2022, essentially, when they started to slow. So, here you can see they're delaying some warehouse openings so they can reduce their 22 operating expenses following a rocky Q1 earnings report. And here's a list of some of the cancellations or delays. You can see a lot of these are deferred, or there are a few that are on hold or canceled, but most of them are just deferred. So what we have here is a situation where Amazon had a choice. And if you listen to some of the discussion with some of the different C-level folks and just leadership in general at Amazon, they talk about how they had a choice to build a lot more resources and a lot more warehouse space than they necessarily needed and take that risk to focus on customer service and support, or to hedge and go a little bit smaller. And they chose to really heavily invest. Now, obviously, this is a massive, massive overinvestment. And you're talking about, I think they cited somewhere around $6 billion in Q1 additional costs. So that is a massive amount. But anyway, after nearly doubling its operations over the last 2 years, to keep up with a pandemic fueled demand surge, they're pumping the brakes on their expansion plans. And here you can see, as you look into this, Amazon currently has 1,200 active distribution facilities. So we're talking about a couple dozen at most, really, is what we're looking at. And the current total size in ground level square feet is 376 million. The next closest is Walmart with 145 million, and they only have 197 facilities. And then Target has 52 facilities with 58 million square feet. So Target and Walmart combined are barely getting to half of what Amazon has. So you have to take it, with a grain of salt. But it is definitely a signal that the market is slowing in the US as well, relative to the breakneck pace of growth that we saw in 2020 and 2021. Okay, let's take a look at the next article now. So this is pretty interesting because Google is trying e-commerce, and this article talks about how they did the same thing in 2013. Now, the approach that they took in 2013 really didn't work well, and here you can read about some of the details of what they did. So they partnered with Target and Walgreens, and essentially they didn't attract a lot of visitors. They didn't have the infrastructure, and so ultimately, it was a failure logistically. And as far as traffic was concerned, it just didn't ever take off. Their plan now is to make it a anti-Amazon by creating a free marketplace for merchants. So this could really gain some traction if they execute on it properly. The author of this article, though, asserts that basically, if this is something that Google is investing in, it's really a good signal for Amazon. And essentially, for Amazon stockholders, they should double down on their Amazon stock because Google most likely will not get it right this time around either. That's the assertion. Um, but this is pretty interesting just in general to see that not only is Google doing something here, but you also have Meta or Facebook, and they are also digging into this social commerce space. And then, of course, TikTok is as well. So, pretty interesting stuff. You can see here the reason why. You can make the assertion as to the reason why. Let me close this ad. Basically, retail leads the online ads blitz. So you can see this is literally showing the estimated share of 22 digital ad spending, and retail is nearly, or it's over a quarter of this. So a massive, massive part of this. And so if you want ads to come in, you pair up your social media platforms with social commerce, and now you have a very viable model. Because Amazon already dominates the e-commerce market and has a growing ad business arm, we think, this article writer, that the Seattle-based Titan is the company best positioned to profit. So here what you're seeing is a battle of titans going into this ad space and this e-commerce space, and leveraging the audience inside of these social media platforms. And it is absolutely going to be very interesting and very important to understand who is trending and who's winning in this battle, and how you're going to position your business so that you can benefit from this competition and hopefully potentially identify the right leaders so you can position with them. Let's take a look at the next article because it speaks to this as well. Okay, so this next article is talking about why social media platforms are adopting e-commerce. And essentially, it's talking about how they're losing billions of dollars to various different security and other adjustments that a lot of mobile devices and other operating systems have added to really prevent some of the intrusive tracking that's been going on for several decades now. And ultimately, the bottom line here was that Facebook generated most of their revenue, almost all of it, from ads in 2021. And if you go through and you read this in detail, this basically is talking about how the app tracking transparency was turned on, and 96% of users opted to not be tracked using the Apple app tracking transparency. So this is a massive number of users, and it absolutely, if you talk to anyone who does Facebook advertising, they generally saw an impact. And although this is ad hoc data, it's definitely a very real thing. So, according to Mark Zuckerberg, he even said that he estimates that Apple's privacy changes will result in 10 billion lost in sales in 2022 for Facebook. Even if advertisers are fleeing social media, though, the users are not going anywhere. And so this was pretty interesting as well. So in 21, online users spent 90 minutes of time per day on social media on average. Fast forward to 2022, and the daily amount of time we spend on social platforms per day has grown to 147 minutes within the span of a single year. And that is substantial. It's almost an hour of additional time. Many users already connect with brands on social media, and 9 in 10 say they buy from companies they follow on social platforms. So, what exactly does this mean? Well, social commerce might be social platforms' best bet in increasing the revenues from here on. So, you could be seeing this titanic plate shift that's occurring, and it'll be really interesting to see. Accenture estimates that social commerce will grow 3 times as fast as conventional commerce, rising from a predicted 492 billion last year to 1.2 trillion by 2025. So 3 times as fast. That is nuts. Now, one of the interesting things that you'll read if you take a look at this article is they're talking about augmented reality and some of the logistical usage of augmented reality today. They go over some of the statistics. But the bottom line is between that and live stream commerce shopping, there are some big opportunities for social platforms and those who are working and leveraging social platforms properly to take advantage of some of these trends that are occurring. Now, of course, this depends on your industry and your space, but there's a lot to be learned here. A lot of people are on social platforms. How can you take advantage of some aspect of this for your business? A lot of different platforms focus on B2B, B2C, and other various sets of demographics. So there are generally going to be opportunities for you to take advantage of this for your business, regardless of the industry and the type of personas that you're going to be looking for. The summary here is that e-commerce and augmented reality could indeed become social media platforms' saving grace. Whether or not they do, it's definitely true that they are looking for a way to continue their maddening growth pace. And if they invest heavily in this space, which it seems that they are, there's a big opportunity for you to take advantage of that for your business. This concludes this edition of e-commerce in the news, but we're not done yet. If you would, will you do some social commerce with that like button and just smash that ravishing like button for us? We certainly look forward to seeing you in the next video. You're welcome to hit subscribe, and we'll look forward to seeing you next time. Thanks for watching, and bye for now.